guys. Nice to have you here today. Whew, let me hit that microphone button. Good morning, Thala. Good morning, Luciano. Paul M. Nice to see you guys. How's everyone doing today? Hey, Ron C. Nice to have you with me this morning. It's so funny. We always start at 15. Hey, Shogun. Like almost every day at 9 a.m. there's 15 people in here. It's good to have you here. What do you think, guys? Should we talk about rules today? Should we study patterns that help us out? Absolutely, Jay Solar. I'd be happy to. And all it is so your software is bringing Fibonacci areas in from other time frames. Good morning, Safia. We're here and all right. So what you're looking at is on your 13.2 chart, the Fibonacci lines that run all the way to the right are native. And these are the ones that are just, they're 13.2 fibs. They're brought about by the pivots on the 13.2. This really, really fat one is a 21.3. This is great if you're holding for those larger time frame targets without having to stare at the 21 and knowing where these areas are. And then the skinny ones are from the 5.1. And the reality is that I use all of these. I'm looking at all of them when I'm doing things. Let me give you the picture. But it's just the different width and whether or not they extend all the way over will help you out. And then John says from the 101 page, and I think that's kind of what I just showed, but here's another picture of it. How cool is it that the creator of the software will show up and give you guys explanations? I love that. They all matter, right, Ron? I agree. All fibs matter. If you got them, use them. If you got them, use them. So, guys, what we're going to talk about today is really what we talk about every day. We're going to talk about rules. We're going to talk about really a lot of it's trigger reading. A lot of what we're doing is we're looking at areas, we're looking at triggers, we're making decisions, but ultimately the goal is to be able to recognize advantages. And one of the advantages that you can give yourself is not trading into news. Understanding when news releases are happening. Today is Thursday, April 6th. At 8:30 a.m., you may have seen the unemployment claims that made that market spike and jump just a little bit. 10:30 a.m., if you're a natural gas trader, you have natural gas news. Just being aware, not so much worried about what it says, knowing that when it's released, the market can move a little crazy. And then everything that I talk about comes from the education page. I like to say this every morning. So there's two places for new users to start. And I really think that the first one is Discord. Coming into Discord, when you go to the educational outline, there is a 101 basics. If you're brand new to Nexgen, it just kind of describes a little bit about what you're looking at. These are Rinko bars. These are trigger lines. There's an entire section dedicated to trigger reading when you come through, because really the trigger lines are going to give us more information than anything else. There's self-training. There's the user guides, and these will link you over to the educational website. There's the trading rules. If you're expanding your knowledge base, let's say you've done your 30 days on high probability trend trades, and you're feeling really comfortable and confident with your ability to read your indicators, well, then there's a couple other examples. Guys, you're not bound by law to be a high probability trend trader for the rest of your life. You may start looking for HVA trades. You may start looking for momentum trades. And these are all available for you. And remember that class, while we start basic, if you're taking these trades, all I need you to do is write your rules on your chart, and we'll talk about them each and every time. There's a great section dedicated to market flow that John Novak adds to all the time. Hopefully on the 17th, I guess I'm going to ask him too. I may have mentioned it in passing, but I'm going to put him on the spot now. On the 17th, I'm going to be in Houston for a doctor's appointment, and we're going to let John come in and hopefully throw some market flow magic on you guys. Section for chart reading, advanced chart reading. And of course, if you are an owner, there is there's the traders chat, guys. This is an amazing spot to go through on that traders chat. You can see what the people that own the software are doing. You're welcome to look at their trades. You're welcome to look at what they're doing. Not a head doctor. You can't fix what's up there, Ron. So all of that is on Discord, guys. And with the long weekend, like John just said, tomorrow the markets are closed. There is no live trading. What a great opportunity to go through and review material, to use your market replay, to practice all of these great lessons, to make sure that your pictures are into your spreadsheet and all that good stuff. Guys, from the education page, if we go to the tutorials section, here are all your rules. Everything that we talk about is right here, links to videos, but when we go to the glossary of common terms, there's two types of trades that we really discuss in class. And the first one, and what I really encourage new users to keep their focus for the first 30 days, is a high probability trend trade. And this is going to be when every indicator on every chart lines up and agrees with the rules for the trade. Typically, the triggers are the strongest, no termination conditions exist, and there's no trouble between you and your target. Guys, the high probability trade, when executed properly, typically wins 70 to 80% of the time. I always tell new users, focus on that high probability trend trade, because what it's going to do for you is it's going to teach you to read your charts, guys. Good morning. Nope, markets are closed tomorrow, 10K. Good Friday. When you learn to read your indicators, to read your charts, they close at 8:30 a.m. I'm going to sleep. There you go, 3-day weekend. Ron will be at the beach, guaranteed, right? Yeah, that's closed. Guys, your ability to read your charts is going to give you 3 essential elements that are going to take you to really wherever you want to be with your trading. You're going to be able to look at your indicators and understand where the market is likely to continue. You're going to understand where the market is likely to go, and you're going to understand where the market is likely to stop. Hey, Shogun, check this out. All I had to do is type in CME trading hours, and you'll get everything. The internet is amazing. The internet is amazing. There is nothing that you can't find on here. That's grain and oilseed. We don't want that, right? So go through there and check it out. I know. Remember when we had to go to encyclopedias or just ask an old person? Now we are the old persons, the old people, but we have the internet now. If you're 50 or up, that's it. How do I spell? We'll go to the dictionary. We are in a different world now. Guys, where the market is likely to continue, we're going to use it for entries. Where the market is likely to go, you're going to understand targets. And where the market is likely to stop is going to keep you from trading into areas that may stop the market, guys. And this is what that high probability trend trade, what that knowledge does for you. It teaches you to recognize advantages and to be able to take trades from it. And the wonderful thing is that it's going to take you about 20 days to really start recognizing this high probability trend trade, and then it opens doors for you. Then you start recognizing medium probability trades. And these are when most of the indicators line up for a trade. However, a small issue exists. And guys, this really will be the vast majority of your trade. I took 3 trades today, and all of them were medium probability. And all of them had to be managed. Because you have to manage assertively on medium probability trades. Your ability to read your indicators is going to allow you to do that. Your ability to read your indicators is going to have you recognizing that small problem. You'll be able to identify trouble. You'll be able to get to a zero loss level, make sure that you're protecting your capital. And it all stems from that high probability. And the high probability trade is really, I'm not going to say it's simple, but it's 3 rules. And it's 3 rules that only happen on 2 charts. And each rule is designed to give you an advantage. And it's important, I think, that you think in terms of advantages. What am I looking for and what does it do for me, right? If you buy a sports car, it's got 600 horsepower. Well, that's an advantage if you're trying to go fast, right? You can't buy a little Volkswagen Bug and expect to have that same advantage. So think about what you're getting out of your rules. Your first rule says that you have to have strong trigger lines. I sure will, Shogun. Your second rule says that you have to have room to your profit targets, no termination conditions. Those are those areas likely to stop the market. And then your third rule says that you're going to use a limit order to buy or sell at an area inside of triggers, favorable large triggers. And ultimately, these 3 rules make up the equation for that high probability trend trade. A trade equals momentum, a clear path, in an entry area. And that's exactly what we're going to focus on for this first hour. And we're going to do it on only 2 charts. We're going to use the most current bar on the 13.2 to determine the trend of the market. If the background is red, we're in a downtrend, only looking for rules to be met for high probability trend trade short. If the background is green, we're in an uptrend, only looking for rules to be met for high probability trend trades long. Rule number 1 happens on the 13.2, those strong triggers providing you the advantage of momentum. Rule number 2 must be true on the 13.2, no termination conditions, making sure that you're not trading into areas likely to stop the market. And this 13.2 acts as a broad stroke of a brush. This is like taking the big roller and hitting the living room walls before you get down to the floorboards. And what you're going to do is get this overall temperature of what the market is doing. And then your 5-1 chart is going to be an entry chart. It's a refinement chart. You're going to take that broad stroke of a brush and you're going to take those first 2 advantages and whittle them down to the 3rd advantage by using a limit order to buy or sell a pullback at an area inside of favorable large triggers. You're pinpointing those areas where the market is likely to continue. And by doing so, it allows you to reduce risk, but it also allows you to maximize your profit potential. Great entries make manageable trades. And those 2 charts come together because they're a reflection of the mentality in the market. Your large chart, that slow chart, that big chart, this is the large crowd, and the large crowd will tell you the direction. The large crowd will establish that momentum. The large crowd is going to look at and respect those termination conditions. And then the small crowd, this little group of yahoos that love to fight the system, they're going to take you on that smaller, faster chart right to your perfect entries. So going to keep it simple. We're going to focus on 3 rules for the first hour. I'm going to cover each. We're going to talk about the looks and what they mean. And then we're also going to make sure that those are happening on only 2 charts. 13.2 and a 5.1, guys. This is where you begin. Ultimately, you may have a 13.2 and a 5.1, and you might look at a 21.3, but the patterns are the same. Because Thala, the patterns on a 21.3 are exactly the same as they are on a 13.2. So in the very beginning, when you're learning to read your indicators, this 13.2 5.1 combo is going to provide more opportunities for education. When you start going up time frames, there is less going on there. I love a 21.3 Thala, and I'll use it for the areas, but I can see those areas on my 13.2 chart. But I'll use the 21.3 to maybe help with momentum. But I don't keep it up, and you're absolutely right there. I keep it minimized off to the side. When you look at my charts, I like a 13.2 and a 5.1, and then this 5.1 is also for my Apex account. And then I've got some range charts that I use for a little help, a little more advanced, but I've also been doing this a little longer. So Thala, the Apex account, I execute on NinjaTrader 8, which means it's one of those prop accounts, right? That you go through, you pass the test, you do the funding. Yeah. So I execute on 8, but I still do a lot of my stuff on 7 because I'm using both 7 and 8. Because the graphics card in my computer doesn't appear to be strong enough to support that many windows in 8 doing everything that I do. So I prefer to just stay with 7 in the moment. And that's just a personal choice. Cool? So Thala, the idea, yeah, is let's get good at reading the indicators on 2 charts, and then it's going to carry you to that next level. And that's exactly how that's going to work out. And everything that we do, and guys, this is something that I found to be true, not only for the high probability trend trade, but really for most traders in general, is that the advantage of momentum, rule number 1, really sets the tone for being successful. And it's all trigger reading. When your smaller, faster triggers, these solid lines break above the large, it paints the background green. It lets you know that you should be looking for rules to be met for high probability trend trades long. When those small triggers break below the large triggers, you can see that it paints the background red. Guys, this is the first advantage that you're going to give yourself, is just trading with the trend. Because when you're trading with the trend, the triggers are on the correct side, the momentum's going the right way. Everything kind of tends to work a little easier. Funny story, John had a broker friend once, and the broker told him, he goes, "Hey, John, I can guarantee you $1 million in your trading account by the end of the year." And of course, John replied, "Wow, that sounds amazing. How am I going to do that?" To which the broker replied, "I want you to fund it with $3 million, and then every chance you get, fight the trend. You should be down to $1 million by the end of the year." But So we're going to trade with the trend. And guys, this is your best look. This is rule number 1 defined right there in pictures. This is strong trigger lines. When the small triggers are crossed up, they're above the large triggers in an uptrend. The large triggers are wide. Guys, this is your best of the best look. This strong trigger look is what we call odds favorable momentum. You're going to see it in class annotated. A lot of people like to put OFM on their chart. And this is a key phrase that you're going to hear in class, because this should be your look for every long trade as a new user. And just the same over here, small triggers below the large triggers are wide. It's that spread between the two. Lets me know that the odds are favorable for the market to continue down. It's that odds favorable momentum. And we're going to look for opportunities with that odds favorable momentum. In uptrends, you're going to see these tails or these wicks on the 13.2. And we're going to go back and circle some today so that you can see it. But these are potential entries on a smaller, faster chart when you have that odds favorable momentum. And it looks the same going either direction. You're just putting those small triggers on the business side of those large triggers. So guys, odds favorable momentum, rule number 1. Providing the advantage of momentum. Is everybody comfortable with that? This typically is the easiest look for new users. It's just a matter of recognizing that split between the two, right? Recognizing that there's space between the two, the odds favorable. And guys, look at that. There's one of those tails, and there's one of those potential entries. Once we have odds favorable momentum, it's important that we're not trading into an area that may reverse the market. We call these termination conditions. And once again, we're going to use those T3 trigger lines to perform a comparison between the areas and the triggers. And the areas that we are looking at on the 13.2 chart for potential termination conditions, divergence highs and divergence lows. This magenta line up top, you'll see cyan lines down below. Guys, these are not Fibonacci areas. These lines simply represent a loss of momentum in the market. If the market is trending down and creates a pivot and this line forms, it means that there's a loss of momentum. The same thing at the top side. If this magenta line prints from a pivot high, it means that we're losing momentum in that upward move. That's all it means. We're also going to look at red resistance and blue support and these yellow 1-to-1 dots, guys. Nexgen has gone to great lengths to color code to try and make it easy for you. In Shogun, it's all written behind the scenes. So you don't even need to understand the technical side of it. There you go. There's that winky. We're not gonna overthink it, guys. John Novak has made it very, very easy for us to recognize. If the line prints, we're losing momentum. Pretty simple, right? But you're absolutely right, Shogun. It has to do with MACDs, and it happens behind the scenes because there's no reason for you guys to have to do that math because we are going to keep it simple and we are going to keep it focused. And guys, this is a great picture for you new users learning the areas. A little guide. Termination conditions are found by a comparison between the trigger lines and the areas. And it's really just a two-part process. Price reaches an area, whether it be support, resistance, divergence lines, 1-to-1s, those price bars come down and get to it. And all you have to do is ask yourself, where are the trigger lines? And if the trigger lines remain above the area of support, this is an area that has the potential to stop the market. You no longer have the advantage of a clear path. Rule number 2 is not met. Price reaches resistance. Absolutely no trigger lines break through resistance. We no longer have a clear path. No more long trades. Divergences, tails, extension lines of divergence. So when they're initially formed, Jay Solar, I think I understand what you're saying here. The market will be moving away from it. So right when they form, it lets you know, hey, we're losing momentum a little bit. When it happens at a key area, it becomes pretty important. But we're going to use it as a termination condition when price returns to that divergence high. And then we're going to use the recipe. Price reaches the area where the triggers. And if the trigger lines remain below, then that divergence becomes a termination condition. And when it happens at these key Fibonacci areas, it creates a very, very strong top and typically a reversal. Not guaranteed, but it increases the likelihood of the reversal. And then on that same note, and I think that this kind of goes through what you were saying, here's that first pivot, right? There's that divergence. We're not doing anything other than recognizing that there was a loss of momentum. This isn't a termination condition on its own. It's when price comes back, reaches that divergence, exceeds it a little bit, and heads the other way. That's when this divergence really gives us that information that it's now a termination condition, and ultimately it reverses the market, pushes it the other way. Is that what you were asking? In the moment, I'm just losing momentum, but when it's retested, now I have that pivot stop out at divergence. That's when it becomes a little more powerful. Awesome, great question. Very good question. And guys, it doesn't matter what the momentum is. Even with odds favorable momentum, if price reaches an area and those trigger lines don't break through, use this as a big waving red flag. You no longer have the advantage of a clear path. It doesn't mean that it's going to stop forever, right? But it means that it may create a bounce large enough to take you out of a position. It might reverse the market for a little bit and then it resumes the trend. But what it does is it robs you of that clear path. It robs you of that second advantage that you need to take a trade. And guys, here's that picture. I'm going to share this one with you. This is about the easiest way I know how to describe termination conditions in one picture. Price reaches resistance, no triggers are through, the area is not broken, there is no clear path. Rule number 2 is not met. We consider an area to be broken when both the smalls and the large break above this area of resistance. You can see that this area of resistance has become support. We now have a clear path to look for those high probability trend trades, and you can even see one of those tails, one of those potential entries. Your high probability trend trade will take you to the medium probability trend trade, and the first one that most users recognize are what we call a 50-50 trade. And a 50-50 trade has nothing to do with your chances of winning the trade. All a 50-50 trade means is that your small triggers have broken through the area with odds favorable momentum, and this is a very key part. And because there's odds favorable momentum, because that momentum indicator has already made it to the other side, this is an area with the potential to break, but it hasn't broken yet. It's not a clear path, but it's a path with the potential to clear. Guys, this look right here will be your first medium probability trade. It is for everybody. And if you look at the market right here, that's exactly what we had. Small triggers break through the area, the large triggers have not. Look at the momentum. This blue fib has the potential to break. That momentum carries it through. And I can tell you guys there was a trade opportunity right here in that 15 area. And we'll talk about it in class, and we'll look at it, and we'll talk about those entries and how you can take advantage of that. So is everybody clear? I try to keep it as simple as possible. Triggers break through. We're good. Triggers don't break through. Sit on your hands. Small triggers break through. Make sure that things are perfect for that entry. Guys, these are termination conditions. These happen on the 13-2 chart. There's one more termination condition that I want to talk about, because what we find is that sometimes the market turns and it doesn't make it to one of those key areas. There will be instances on your 13-2 chart where maybe you have a clear path and the market appears to just go up out of nowhere. Maybe you have the clear path and odds favorable momentum, and that market seems to come down rather than continue the move to the fib. This final termination condition you're going to recognize on a 5-1 chart, and it's going to allow you to see change before you'll see it on the 13-2. And this is 3 divergence in the same price range. It may terminate the trend. Yesterday we had a good discussion. I'm going to talk about 3 scenarios that use this divergence, and they're all unique. 3 divergence, 3 losses of momentum in the same price range may terminate the trend. That's the first one that you'll see. And it just adds strength if your small trigger lines break inside of the large. Because if you remember the trigger lesson, smalls outside, space between the two, odds favorable momentum. Smalls inside, it's that weakening of the triggers. Anything can happen. So now we have 3 divergences, which may terminate. And now we've coupled it with a loss of momentum visually with the trigger lines. It becomes even stronger. And then when that third divergence is higher than the previous from a low or lower than the previous from a high, we get that head and shoulders pattern. That head and shoulders pattern lets me know that not only can price not exceed the previous pivot, but we've lost momentum a third time. So guys, you're going to see this look on the 5-1, maybe from this bottom or this top, when your 13-2 looks like this. And it's going to help you identify that change real time and keep you from maybe going for that last little push to the upside or taking that opportunity to go to the downside. So guys, do me a favor, give me a Y in the room if everybody's comfortable. Rule number 1, odds favorable momentum. giving you the advantage of momentum, right? The first step in that equation. Rule number 2, giving you a clear path, making sure that there's nothing in your way, nothing between you and your target. Guys, when you have these two, all you have to do now is go to that third chart, go to that refinement chart, that smaller, faster chart, and we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And before we do anything at all, I want to define favorable large triggers. Favorable large triggers just means that the large triggers are wide, they're in the direction of the trend. The synthetics are wide in the direction of the trend. And they should be overlapping, guys. The tighter they are, one on top of the other, what happens is the smaller your window of opportunity becomes, the less risk you put on a trade, and the more specific you can be when finding that entry point. So during the live market, this will be the look on your 5-1 chart when the 13-2 triggers are strong, when there's nothing in the way. This is the moment when you start looking for an entry on your 5-1. And you're going to focus your attention on the 5-1 large triggers. If they're up and strong, overlapping with those synthetics, you're simply going to look for the areas that may be present. Trend trades come from areas, and it can be fibs, support or resistance, mid bands, or 1-to-1s. And guys, we're using Paul, there's absolutely nothing wrong with demanding the best entry on a medium probability trade. Why? Because you have a... I think that's great. Let me give you a picture that reflects your new sentiment. And we'll talk about that in just a second. Let me talk about entries, and then we'll get to that best of the best entry. And we'll talk exactly about what Paul's saying, about making sure and insisting that he has the best entry on those 50-50s. But before we do that, we need to know how to get into the market, right? We're going to focus the attention. Fibs, mid-bands, 1-to-1s. And we're going to want them to be inside of these large triggers that are up, strong. These look like a shark about to breach. The rules say that I'm going to buy a pullback. I'm going to buy a small retracement in price, counter to the underlying trend. Remember, large chart, big group tells us that we're going up. Big group tells us we have momentum. Big group says there's nothing in the way. Now it's time for those yahoos to do their part, guys. They're going to give us that pullback. And that pullback begins with a reversal bar. After all of those green bars, we're looking for a red bar. And when we get it, when we get that red bar, it's just signaling the beginning of a small retracement. A little pushback against the underlying trend, against that uptrend. You're going to create a window of opportunity. And that window of opportunity is the area where the market is most likely to continue. Remember that we said that your chart reading is going to allow you to identify it. Well, we're going to do it right now. Your window of opportunity extends from the highest point of support to the lowest point of support inside of favorable large triggers. And that's the key, guys. Not only are we letting price pull back to the triggers, but we're also letting price pull back to one of those key areas. It's like throwing a tennis ball up against a wall. You're giving that tennis ball a place to bounce. And no matter how much you wish it would bounce 3 feet in front of the wall or go through that wall and bounce 3 feet behind it, it really has the best chance of a ricochet when it hits something solid, right? So right at the top of this window, at that highest point of support, you're going to activate a limit order and you're going to wait. One of two things are going to happen. Either the market's going to come back to you and it's going to fill that limit order, and you're going to be in a long position at 79.21, or the market's just going to continue up with all that momentum in a clear path, and you're going to wait for your next best entry. As I'm long at 79.21 in this picture. Why am I long? And I think it's important to go through and talk about this. Because I had strong triggers, I had the advantage of momentum. Because I had no termination conditions, I had the advantage of a clear path. And because now I've been able to pinpoint my window of opportunity, I have the advantage of an entry area, that place where the market is likely to continue. I have 100% satisfied my high probability trend trade rules. And because I have, guys, this is a trade that I'll take 1,000 out of 1,000 times. My initial stop, my protective stop, goes below the window of opportunity, where the market shouldn't go. I didn't understand that phrase when I first started trading, where the market shouldn't go. What does that mean? That means that if price breaks through all of these areas of support beyond these large triggers, I simply don't want to be in the trade anymore. And it's okay. You will take losers. It's a part of it. Anything that wins 70 to 80% of the time has to lose 20 to 30. But the key is we can decide where that trade is no longer advantageous. But guys, with all of those advantages, 70 to 80% of the time, this is your result. This is why I never miss one of these trades when my rules are met, because I know through back study, through pictures, through practice, that I'm going to win more than I lose. And after the market pivots up, I can reduce my risk behind a reversal bar. Because I wait for that best of the best area, my risk is reduced, my profit potential is increased. I'm going to talk about a couple things on entries here, but does everybody feel pretty good about it? Wait for a reversal bar. At the time of the reversal bar, I like to look at the top of my triggers all the way to the bottom of my triggers. And then I go from that highest point of support to the lowest point of support. And do you see how the window of opportunity isn't from the top of the triggers to the bottom of the triggers? It's from that highest point of support, the mid-band, down to that lowest point of support. Which means that in reality, I am 100% expecting the market to possibly do that. But because of the momentum on the 13.2, I'm not willing to put an order down here. I'm going to put it at the top with all that momentum. And mentally, I'm going to be okay watching it go against me a little bit. Because that's part of trading, guys. Don't get focused on the ticks. Focus on the advantages. The advantage of momentum. The advantage of a clear path. The advantage of being able to pinpoint. Brand new users, you're going to get scared. And you're going to see that market start to go up. And you're going to jump in. Has anyone ever done that other than me? Where you watch that little fluctuation and you go, oh my gosh, I better jump in. Better jump in because it's going without me. And then sure enough, it does exactly what it's going to do. And guys, what happens when you do that? Your initial risk still has to go all the way down here, right? And look what you've done to your profit potential. You've robbed yourself of an awful lot of money. So I'm going to say this, and I say this every day as loud as I can. Great entries create manageable trades. You guys want to see something cool? Here's an entry from this morning. Anyone else ever get in high tick and kind of feel like you're a badass? Pardon my French. This is just the Nexgen rules coming in, guys. That felt good. I was like, look at that, high tick. Because you really do. When you have a couple entries like that, you're like, oh my gosh, this stuff works, right? And the whole goal is to get this great entry. Look at that area inside of favorable large triggers. There was no problem in that entry. When I got this reversal bar, Thala, I had 2 ticks of risk on my trade, right? Pulled right back to the mid-band inside of favorable large triggers. I would go so far as to say that was a rock star entry. And because it was a medium probability trade, I had to manage assertively, right? My smalls had broken, but my large had not. I take a perfect entry. Guys, I made $100 at the first trouble spot. And I think I made about 85 on the second. That divergence was coming in. I managed assertively. Shogun, you were curious about that. When I know there's a potential problem, I don't have to keep money on the table. But the great thing is it provided even another opportunity with the rules met. And great entries create manageable trades. Profits were taken, and this one went down to that pivot low. It was an easy $300. Guys, I took 3 trades this morning. No class tomorrow, Paul. Whoops. I guess Discord got upset about that. It just booted me out. I'll be right back. Here I come. I know you guys can hear me when that happens, so let me get everything squared away so you can see me again. There's a couple things that I'm proud of. One thing is that I trade the same plan that I teach you guys. I don't make up stuff. I don't trade different looks, different scenarios for the most part. I'm a high probability trend trader and a medium probability trend trader because I feel like that's all I really need. And it takes a level of patience. Your goal in the very beginning is just focus on these entries, guys. When the entries are right, it becomes very manageable. It becomes very easy to take quick profits to protect yourself. Great entries create manageable trades. So I'm going to give you a couple tools that are going to help you find these great entries. And the first thing is I'm going to give you guys a high probability trend trade checklist, guys. All this is, I'm dropping this in the room right now. All this is a way for you to police yourself. These are my rules. This is what it's going to take to get me in. Let me make sure that I'm following them. And there's a 2-part process to getting to where you guys want to be. And I'm going to go to it right now. To becoming a confident trader ASAP, the first thing you need to do is you need to post your trades in class, guys. Every time you take a trade, show me what you're doing. But don't just post a picture in there and go, hey, Mark, was this good? That doesn't do anything for either of us. I want you to write your rules on the chart. And that's why I give you the checklist. You know exactly what to write on the chart. And what you do when you write odds favorable momentum, when you write no termination conditions, when you write I had an area inside of favorable large triggers, what you're doing is you're embracing the language that's bringing you success. You know exactly what you're looking for. If all you write on a chart is I lost, this stinks, what's going on, then you're not giving yourself any lessons there, guys. So make sure that you're annotating charts, you're putting them in the room, you're getting that feedback 15 hours every week. Well, except this week because it's a holiday. My whole goal in life is to talk to you about what you see, what you're doing, and then give you feedback on it. And the more you take advantage of that, it's like having a private session every time you post a picture. You and I talk about exactly what you did. You get all the feedback that you need. We can talk about entries. We can talk about exits. We can talk about management. But ultimately, we're just getting you to where you're building your plan through repetition. Your first plan should be simple, right? First 20 days, simplicity, 2 charts, 1 trade, high probability. Here's what it takes to get me in. The second half of being successful, guys, of getting where you want to be, is posting your pictures in the room. Man, I've got a lot of pictures open. And then using that real-time spreadsheet, or using that spreadsheet to track your performance. I use a spreadsheet every day with you guys, right? Every time I take a trade, before I went live, I use this first page. And I use this first page to track everything that I did. Every entry, every exit was put into this spreadsheet. How did I feel going into it? Any notes that I had on it? How did I do in the trade? Was it simulation? Was it replay? Was it live? Did my profit targets work? Guys, this is a picture that a Nexgen user allowed me to share with you guys of her spreadsheet. Isn't it amazing? You're going to recognize patterns that make you successful, but even more so, you're going to recognize patterns in yourself. When I started trading, In learning the software, I traded into termination conditions more than I care to admit. So what I had to do is I had to take the spreadsheet and I started noticing my annotations. Termination condition, termination condition. I started posting in the room, at which point John Novak started saying, Mark, how many times are you going to trade into a wall of resistance and hope for the best? Ron, I'm sure she is. She had an amazing plan and she was consistent. If her husband's been trading Nexgen forever, if I had to guess, she's living life and having a blast and day trading and enjoying the West Coast. What you guys will find is that people will be in this room and then they'll get their basics, they'll get their foundation, they'll write their plan, and then they just kind of disappear, which is great. That's exactly what I want. My goal is that you no longer need me. I used to say the same thing as a personal trainer. My goal is to get fired because it means that you've got the lessons you need to be successful. Because every time you take a trade, every time you see the rules met, put it into the favorite look section of that spreadsheet. Every time a rule is met, right? Ron, I'm hoping and praying, but man, you just don't seem to go anywhere. Getting addicted to my voice, and you know what? I appreciate that, Zima. I think I sound ridiculous, but doesn't everybody think they sound ridiculous? Nobody likes their own voice. Guys, every time your rules are met, put it in the spreadsheet. Create a database that you can go back and study every day. I've already given you the checklist, what it should look like, right? Every time. So let me give you my spreadsheet, especially with the long weekend. And guys, this isn't me being amazing. This is you being amazing. This is 140 pictures of high probability and medium probability trend trades. These are all provided by Nexgen users from class. These are people that took the time to learn the lessons, to execute them in the market, and then share their pictures in class. And I just kind of pilfered them. I was like, you know what? That's perfect. I want to do what you do. I'm going to put it in my spreadsheet. So I just gave you guys my spreadsheet. Feel free to use it. If you want to start fresh and clean and have your own, you can download it from right here on the education page. It's a Google document. You'll need to download it. But I want you guys to embrace this path because I can tell you that it works. Take pictures. Take more pictures than you think you should be taking. Because every time you take a picture and you write on that chart, you learn something. 3,924 pictures. And guys, this is from October because I bought a new version of Snagit. I'm up around 10,000 pictures. Hey, Maharali, I think I said that right. Welcome to the classroom. Perfect test. I can see you. The more pictures you take, the quicker you'll get to where you want to be. I always tell people, commit to 15 a day. Guys, I take 15 pictures before my first cup of coffee is done. 15 pictures a day is 75 a week, right? That's 300 a month. That's 900 at the end of 90 days of study. I promise, if you take 900 pictures and write on each and every one of them, you're going to be amazed at how brilliant you are in a short amount of time. All right, so that's your path. Is everybody comfortable? We're going to focus on 3 rules, right? And when we focus on those 3 rules, we're going to focus on the advantages that they provide. No, it doesn't mean 15. Not at all, Jay Solar. How can you take pictures? Well, let's look. Let me open this back up. Here's a pre-trade picture, right? Here's my rules being met. So I take a picture that's pre-trade. Is the market coming from a good bottom? Look at that support that creates a full reversal. Absolutely. This is just a way for me to check myself. Do I have odds favorable momentum? I do. No termination conditions? Nope. Area inside of favorable large triggers? Absolutely. So Jay Solar, all I'm doing here before I ever even get into a trade is I'm taking a picture and I'm making sure that I'm following my rules. I love pre-trade pictures. I can take a picture of my entry and then I can go back and I can say, well, did anything change at the time of entry? I'll take a picture after my entry. Guys, this one lost, by the way. I'll take a picture of my entry, of my exits, right? I'll take a picture mid-trade. This is what I see mid-trade. This is what I'm doing. And I even annotate. Why didn't I get out of this trade? Because I'm saying, well, this is my continuation point. So Jay Solar, I might take 3 or 4 pictures per trade. And then you'll also get pictures in there. And let me click on Fulgor's because he said he didn't take a trade. And what he did is he's saying, well, I'm looking, I'm learning, I'm trying to figure these things out. And he's saying, understand he wants to enter at points of reversal. He has momentum, no termination condition. So Folger, when you say, ooh, excuse the voice crack there, when you say you weren't confident to take the trade because it seemed like the market was going to pivot. Did it seem like the market was going to pivot on the 13.2? Did it seem like the market was going to pivot on the 5.1? What scared you out? Doesn't it have to pivot on the 5.1 or we don't get the entry, right? Does that make sense? So let's look at your pictures. Odds favorable. Smalls above the large, larger wide, angled in the direction of the trend. Rule number 1 is met. You have a 50-50 trade, right? The large are below, but the smalls are above. I know, and that's what we're developing. So you're going to go back. Did this first circle pull back to an area of support inside of favorable large triggers? I feel like it did. Did it do it a second time? Absolutely. It even did it right here, didn't it? So what you're doing now, Folger, is you're going back and you're developing trust. So you're going to go back. Should you even consider taking this one? I love this picture. So let's look at something. We're going for the first one. I'm going to put my checklist on it. Is the market coming from a good top or bottom, Folger? It's not, is it? It's kind of coming from the middle of nowhere. So I'm going to put no. This one increases the likelihood of success, but it's not mandatory. Did you have odds favorable momentum? Did you have no termination conditions? And then let's do the window of opportunity together. This is the top of your triggers, and this is the bottom of your triggers. That's a pretty big gap, isn't it? But Folger, this is the only area inside of them, right? That's the only area inside of favorable large triggers. Couldn't you take the trade there and put your stop? Because that's where it should go if it's going to go, at the area inside of favorable large triggers. Does that make sense? The only time I'll really ignore is when I only have one area where it could possibly go from. What else do you see? 1, 2, 3 divergences, ascending. Lets me know that the market may terminate. So I'm seeing that change on the 13.2, on the 5.1. I love this entry. And then the same thing here. Top of the triggers to the bottom of the triggers. Here's your whoops. This one actually has a larger window of opportunity, doesn't it? And then this one has the window of opportunity as well. So what you're doing right now, and I think that this is one of the best pictures ever, is you're allowing your opinion to get in the way of your rules. Does that make sense? The most expensive accessory that I own is my opinion. Because my opinion gets me into trouble. My opinion gets me fighting strong triggers. My opinion gets me not getting in at the area inside of favorable large triggers. My opinion keeps me out of winners. You said on the last one, price is already inside of right here. So, Jay Solar, are you ready for the question? Where in your rules does it say that price can't be inside of the large triggers? My rules say take a pullback to the area inside of favorable large triggers. Does that make sense? No matter where the price is right here, the smalls are still outside of the large, aren't they? That's a good look. There's only two divergences. Whoops. Discord's taking the holiday early today, isn't it? Sorry, guys. I'm on my way back. On my way. Sit tight. Don't panic. Here I come. And Jay Solar, I think that was an amazing question because it kind of illustrates one of the human nature elements of what we do. If my rules say from an area inside of favorable large triggers, your brain is going to say, let's turn this into a rule because I'm afraid to lose, right? That price bar was inside of the large triggers before it reached the area. The key is the area inside of favorable large triggers. And I think that that's a great observation. I'm not worried about those price bars being in there. What I'm worried about is the areas inside. Does that make sense? And I think that if you embrace, especially as you work towards consistency, and this is why I'm such a big fan of the language. No, I think what you were thinking is normal. But guys, this is one of the biggest reasons why I ask you to annotate your charts. Not just with, there's my trade, but use the language that gets you to enter the trade. Odds favorable momentum. No termination conditions. Area inside of favorable large triggers. And what it does is it keeps you focused on what's important. And it's going to help you eliminate opinions. Folger, does that make sense? If you had only focused on the language, you would have taken 3 trades there. And you would have taken 3 winners. But this is what Simulator is for, right? Guys, Simulator is for you to break everything that you can break. For you to make mistakes, for you to post them in the room, for you to ask questions. And I hope I don't have to say this. I hope it goes without saying. But when you post a loser or a trade that you don't take, guys, I don't think less of you. I'm excited that you've posted, that you're embracing the opportunities. And I'm excited for an opportunity to help you get to that next step. And that's exactly what we do. So Safia posted in the room. She got the first one, 9:01 a.m. She said, Mark, let me show you what I'm doing. Safia says the smalls are above the areas, the large are not. It's a 50-50 trade. And then Safia, you get long and make quick profits, but then you went short, and I'm not sure why you went short here, Safia. And this is where I need your rules, right? Because I've got odds favorable, I've got no termination conditions. And Safia, you went short against momentum. You went short against trigger lines, right? Write your rules on there. Remind yourself that that trend is your friend, that that momentum is advantageous. Um, and this is one of those instances where, out of fun, I like to share John Novak's best-selling book, How to Commit Financial Suicide. Trading against strong triggers is one of the easiest ways to lose your money. Forming an opinion is one of the easiest ways to lose your money. And John wrote this as a joke. Just that funny reminder that termination conditions can mess up a trade quick, that fighting triggers can mess up a trade quick. Um, and then when you turned it around, do you notice how you kind of missed the best entry trying to go short and you gave up a lot of profit here? But then you got with the direction. No, he didn't really, Jay Solar. But once you got with direction and momentum, look at how effortless it was. Yeah, great job, Safia. And guys, remember, if it ever stings when I talk about one of your trades, human nature makes us feel guilty if we make a mistake or break a rule, and that's okay. It happens. I love this one. 50-50, right? Smalls above the large, larger wide, angled in the direction of the trend. Everything says up. No divergence, strong triggers, perfect entries. Safia, you were out before divergence ever printed. Otherwise, we would have seen it, right? It worked out great for you because this trade didn't work. But that divergence wasn't there at the time of your exit. You had potential. You had no divergence. You had strong triggers. You had a tiny window of opportunity. This is that perfect 50-50 trade, isn't it? Paul, would you agree? That's a perfect look on a 50-50 trade? Look familiar, Safia? Beautiful. Everything about this trade. I took it. And my stop was outside the window of opportunity. And it may keep going down, right? It may go to the bottom of that window. It may go to the bottom of those triggers. You never gave it a chance to. Your exit is at an area of support inside of favorable large triggers. I think I was 1625 on my stop. And Jay Solar, this is a good one from yesterday, right? If it goes to 1650, it's not our trade anymore because it's outside of that window of opportunity. Yeah, Safia, it's a great trade. I took it. I lost it. Don't feel bad about losing that trade at all. And guys, what you'll find is that the more comfortable you get with the advantages that your trades present, the more okay you are with taking a loser now and then. And when you stop expecting to win every trade, I love to share this one. Safia, I loved your entry on that one. When you stop expecting to win every trade, you actually start winning most of your trades. And when you quit caring about the result and worry about the execution, and the execution was perfect, life gets easier. Safia, I love that trade. You're in a hurry for dinner. You were getting dinner right as I was waking up pouring my first cup of coffee. Let me see where we're at. And guys, I'm scrolling to the top, scrolling to the bottom. And Tony, I believe you're next. Let's see what Tony did this morning. No, you didn't wake me. Trust me, I do not turn on the computer till I'm awake. I don't have Discord on my phone. I don't get notifications from anything. I have OCD, so if I get a notification, I have to go to it. Tony says, from a termination condition that creates a full reversal with odds favorable momentum, he will take the pullback. to the mid-band inside of favorable large triggers. It's a good-looking trade, right? Losing momentum a little bit on the 13.2. We can visually see that we're losing momentum on the 5.1. I love your entry. This loss of momentum, did it just push up a little higher? If you're going to use that 8 range, check this out, Tony. Reversal bar from the outer band and 1-to-1s, it may push up a little higher. An instance like this isn't a bad opportunity to wait for one of those confirmation signals. And if you look earlier in the room, John put together a great lesson on using the 8 range chart when it's appropriate to wait for a signal. And he and I actually talked about it live when I took that same long that Safi and I took. He goes, man, I'm going to hold off on this one. There was just a little bit of information there that might have kept you patient for that higher look. Yeah. He put it in the market flow. Let's see if I can find it for you guys. And John's always adding stuff in this room. Under market flow, I think his most recent page or post. Let me scroll down. Sorry. He's talking about using the market flow chart and getting that information from those outer bands. And it just helped a little bit. So from the Discord page, if you go to the market flow section, not from a video, Shogun. That was from John Novak reading indicators this morning. He just put together a lesson. And that's just all I was saying is when he sees something pertinent in the market and he thinks that he can create an opportunity for you guys to be smarter, he'll do it. He'll come and he'll post it in the room and he'll go, hey guys, guess what? Here's some of my chart reading. Here's what I did. Here's what I thought. Here's what I saw. I hope this helps you with what you're doing. And it's pretty cool that he does that. All right, Tony, we got another one for you. And then it pushes up. Let's see where you got in. So you took the short from the higher point. You're fighting momentum, you're fighting triggers, but you're using that 21, using that market flow a little more aggressive, and you're just counting on that pushback to get to the large triggers. It's an aggressive trade. It's probably a lower probability trade because you're fighting momentum, right? Because you're fighting direction. And you didn't have an area to trade from either. But you got that reversal bar at the HVA. So you use market flow just a little bit to help out. Aggressive, but great execution. Ron, everything says down. You jump in, you jump out, you make your money. I love it. Guys, if you watch Ron C's trades in here, everything revolves around momentum and a clear path, 100%. Those first two advantages he's turned into a trading plan to bring him a lot of success. All rules met. What rules? So Jay Solar, when you write all rules met, what rules were met? You say you lost the trade. Right here, you removed it for a second. It was the exact moment when it reached your entry point. How did you lose the trade if there wasn't an entry? I'm a little confused, so let's go through it. Termination, creating a reversal. Smalls outside of the large. We are 50-50 on a divergence low. There's your reversal bar. Here's your window of, here's the top of your triggers to the bottom of your triggers. Here's your window of opportunity. Your initial stop goes outside of that window. Jay Solar, help me understand what you did to lose that trade. because I don't see entries and I don't see exits. What I see is you identifying a great entry. Did you jump in early and get stopped out at the best spot? You were going short and got out to change the amount of trade. So you never got in. You didn't lose. You just didn't take the trade. Right. One thing you can do real quick, and maybe this will help you with that, is let's say hypothetically, I'm looking for a long trade right here. I can click and I can crank that up real fast to change my number of contracts, but that original order stays in place. So I'm never at risk of losing that entry. Does that make sense? Maybe that's helpful. Haha. One thing though, the one before, oops, sorry, I was looking at a different one. Does that make sense? Okay. So one thing, and this is just me being an English lit major. You say you lost a trade right here, right? What's the brain's natural reaction to feeling like you lost? There's remorse, right? There's anxiety. It's a negative. It's such a negative word. Because you didn't lose a trade, you just didn't get filled, right? Nothing bad happened. So what happens is that when you say I lost it, your brain says, Jay Solar, we have to make up for that trade. We have to make up for that one we lost. And it goes into panic mode. It's like going to Vegas and gambling scared. Oh my gosh, I've lost almost everything and mortgage is due next week. I better double up. I better get reckless and hope for the best. So guys, I think language on a chart becomes very important, whether it's the language of really focusing on your rules being met, or it's the language of when it doesn't work. Yeah, exactly. Do you know what the best word ever? Next. Because what does next mean? Next means that I'm looking forward to that next opportunity when I have all those advantages. And that wasn't just for you, Jay Solar. That's just something that I've realized. People that write negative things on their charts tend to do negative things. And I had someone tell me once, if I had a coach that talked to me the way I talk to myself, would I keep that coach? Probably not. Tony, going rock star. Odds favorable, 50-50. Perfect entry, just below the mid-band. Why did you get out so quick, my friend? You say you were in and out as the second divergence printed. Tony, the second divergence printed right here. And it pushed you right up to a mid-band inside of favorable large triggers. And you still had strong triggers, right? J Solar, Apex isn't a type of trade. It's just a prop firm. But do you see how that worked, Tony? You still had odds favorable momentum. And here's a great lesson on expectations. Let me help with you because I love this lesson. And right now, Paul's going, I know this lesson. When you get two divergences down here, but the small triggers are still outside, what you're going to see a lot is it'll take out this previous pivot. And look how that previous pivot gets taken out and lines up with the absolute perfect entry with all those advantages that you had on the 13-2. Does that make sense? Two divergences, Triggers are still strong. It takes out that previous pivot typically, and it still creates an opportunity for a trade. When the 13.2 says that you still have the opportunities for a trade. So does that make sense, Tony? I hope you're listening. That's a good chart reading. That's a great pattern to start looking at. And it stems from these small triggers still being outside of the large, still having that odds favorable momentum on a smaller, faster chart. I think it's a great trade. I think you overthought it just a little bit, but you made money on it, which is always a great position to be in, right? Pineski. You will always be Pineski. 50-50 trades have been killing you lately, you say. That's okay. Don't take them, right? How easy is that? 50-50 trades are killing me. Don't take them. Isn't that tough to do? To have that awareness. Guys, 50-50s have been absolutely kicking my ass lately, but I keep taking them. Why? Because I'm afraid to miss a move. But this becomes a great study point, doesn't it? Now you start going back and looking at 50-50 trades. Well, what were the conditions? On the first one, smalls are still outside of the large. Maybe take a shot. On the second one, smalls are inside of the large. I'm willing to miss that one. Same with this one. So you create this list of rules. If there is a 50-50, it's okay to demand that you have the best of the best entry, but have reasons, right? Don't just skip trades because you're scared. Skip trades because you have a reason. TB, I don't know. Odds favorable momentum. You do have odds favorable. It's a 50-50 trade, right? Beautiful entry, Zeba. Quick profits. Second higher divergence with the small triggers inside. Beautiful exit. Zeba, very well done. I love everything about that trade. And then Paul. I prefer to say Pineski. It makes me happy. I don't know why. Paul, we're not getting a picture out of that one. And then Zeba again. When your order is not filled, what should you do? Just cancel it. Yep. If it doesn't come back and get you, just cancel it. Click that X right there. And then Jay Solar, I'm just going to call you Jay. I hope that's okay. It's just easier than Jay Solar. Odds favorable. Looks like no termination conditions. Looks like you took a perfect entry right at support inside of favorable large triggers. Can we talk about your window of opportunity, though? And maybe we have the conversation after this one. Yeah, Zeba just hit close. And then look, and this was after. So it's okay that the prices were in. Your window of opportunity was this mid-band, right? And probably support, and you nailed it. I'm glad you didn't get in at the top here. That great entry. And then here's one of those two divergences. It takes out the previous pivot, doesn't it? And then it runs up and lets you make money. And when you talk about patience did it, thought for a moment it was going to go south, was thinking on bailing, what did your 13.2 look like? 13.2 was perfect, right? 13.2 was 100% ideal, which means that two divergences don't scare me so much. That clear path helps keep you in the trade, and I think you did a great job on that one. Great trade. Your question is, can you wait and see if it fills, or is it best to get out? It depends. Are your rules still met, Zeba? You've got a 50-50 trade with 3 divergences. Are your rules still met if it keeps pushing up? If they are, leave it there. I love waiting to see if it gets filled because what happens, let's go to the entry looks real quick. What if it does one of these? It starts to go and you're like, oh, it's not getting me, I'm going to cancel. And then it pulls right back down and does what it's supposed to do. Right? So give it a second. Let it go the other direction before you decide that you didn't get in a trade. Great question. Good picture. Let me see where I'm at. Paul. Odds favorable, no terminations, 2 divergences, strong triggers, perfect entry. Didn't work. And guys, there's that magic word. Next. Beautiful trade, Paul. Perfect setup. Perfectly rules met. Everything said go. I'm going to steal this one and put it in my spreadsheet because I'm not going to lie. I want to be able to take that trade every time it sets up. Guys, steal this picture. And if you're brand new to this classroom right now, you may be asking yourself, but Mark, why on earth would you take a picture of a loser? Why would you take a picture of a trade that didn't work? Why would you want to go back and have that happen? Because guys, that look, this is a look that wins typically 70 to 80% of the time, which means that 20 to 30% of the time, guys, there's a cost of doing business. And the healthiest thing you can say as somebody that believes in statistical advantages is next. Take that trade every time it shows up. Paul, thank you for posting that. Guys, it's hard to post your losers, but I can tell you right now it feels good to post a loser and hear that you did everything right. It just didn't work. Gary, same trade. Why wouldn't you take it, right? Exact same trade. Joel, you going to show me the same trade? Same trade. Why wouldn't you take it? It had every advantage. There is no remorse, no regret, nothing. It had every advantage. Nice job, guys. Gary. Termination condition, right? Absolutely none of your trigger lines made it through resistance. Dala, I don't know, honestly. I would, and just call me crazy, I don't know. You'd have to go back and find it. I'm not sure how that happens. Have you, and here's a crazy thought. Rather than resetting it, cancel it, and use the Save 80 coupon and just open up a new account, right? Because if you're doing a $50,000 account, that's cheaper than 40. Gary taught me that trick. Let's see, who's next? Gary, identifying termination conditions. Bobby T. It's just fun to say, right? Bobby T, every time. Every time, right? Guys, it warms my heart to see each and every one of you take this loser. And I know that sounds horrible. I am 100% on board, happy as a clam. Guys, I'm clam happy right now. That when you have odds favorable, when you have no termination conditions, when you have an area for entry inside of favorable large triggers, you say, I have to take that trade. I am obligated to take that trade. Does that make sense? And then Andy Trader, because of the termination condition, Andy's willing to fudge the rules just a little bit at that, right? Great read, Andy. Termination condition creates a full reversal, gives you odds favorable momentum. The stars align for you right at an area inside of favorable large triggers. And you say, I realize I'm giving away the advantage of a clear path, but I have every other advantage and I'm coming from a termination condition. Take it, manage assertively. Beautiful trade. Andy, great execution on what is not a high probability trade. All right, Miel. There you go. I had to look at it for a second. You've got a lot going on here. 13-2. Same thing. We're trading into a termination condition, but you are trading with momentum, right? You have your triggers, you have momentum, and that turns out to be a beautiful entry right at support inside of favorable large triggers. As long as you recognize, and guys, I'm not telling you not to take the trade because I will never tell you what trades to take. All I'll do is talk about advantages and disadvantages. But that is smack dab into a termination condition, isn't it? Does everybody see it? Like, that's not even up for debate. That is such a termination condition from a bad bottom. This is a trade that's going to lose more than it wins. 60% of the time, it's going to lose every time. But if you took it, it worked out this time, right? It's the market teaching you bad habits. The only thing I'm concerned about, and Miel, because I know that you're still working on it, look at where the entry was circled. That's your first 20 days. Trader Mario, two things. First of all, welcome to the class. It is absolutely great to have you here. Welcome to the room. Thank you for posting. And let's talk about what you did. Termination condition creates a full reversal. What an amazing look. Odds favorable momentum. Rule number 1 has been met. You're 50-50 on the termination conditions. The smalls are through, but the large are not. The only coaching that I can give you on this one, and I'm going to say this is awesome for a brand new user, is that your entry was right up here. Trader Mario, are you with me in here? Because this is a beautiful example of how momentum carries you to the next level anyway. Your entry was at 22. You're in at 10. What does that mean? That means 12 extra ticks of risk, 12 less ticks of profit. Thala, when you check out, it'll give you a place to put in the coupon. There'll be a box that says coupon code. So Trader Mario, awesome read on the 13-2. The advantage of momentum, you had a 50-50 trade, which meant that that area had the potential to break. Just getting in, working on that rule number 3 gives you a more manageable trade and a lot more room to make money with a lot less risk. Great job. Welcome to the classroom. Zeba, 50-50. Looking for the pullback inside of favorable large triggers. I like it. Zeba, why do you think you did something wrong? To send what entry? Oh my gosh, Zeba, I'm a man. I don't remember that. This isn't the trade, though, that I asked for it on. The trade that I asked for it on yesterday was a short in crude oil, somewhere around 76. I still remember that. This is, but it's not the example. And remember afterwards, we determined that you were getting in on the reversal bar and putting your orders there rather than at the areas. Thought we had an aha moment there. This is beautiful. I love everything about that. I think that's an amazing pre-trade picture. Perfect execution. Follows the rules 100%. Gary, 50-50. Two divergences, area inside of favorable large triggers. Didn't get the market flow signal, no trade. You did, Gary. Right there. You got an antenna bar from the price that's at the area inside of favorable large triggers. And then that third divergence, that's the deal breaker, right? But you have to decide on a 50-50 trade. Two divergences. But you did get a signal. And then Paul, you say 50-50s are killing you. Couple divergences. I love the entry, right? Love everything about the entry. Just didn't work. 50-50 trades are not high probability. It's okay to be done for the day. Keep simulating. Lots to learn. This one I love. Odds favorable. Comes back, rolls. Beautiful. Paul. When a great trade doesn't work, Paul, that is such a great entry. That was such a great entry. You let the shenanigans unfold, right? Everything was perfect. And then the market said, oh, we want to jack around a little bit and retest down here. And then when everything agreed again, boom. Man, Paul, this is heads up trading. This is great chart reading. Tell you what, guys, it's 10:30. Let me first say that I love the fact that you guys are making me run over. I usually stop after the first hour, but you guys are doing such a great job keeping me busy. We haven't even looked at a live market yet. Same look, right? 50-50 on the one-to-ones, divergence prints. There was your entry point. Lower divergence says hold on. Paul, this may be another one of those instances where it's appropriate to wait for a roll. That's your S&P, guys. Clear path is the start to everything, isn't it? Well, momentum and a clear path, guys. What do we see on crude oil? Support to a pivot stop out. There you go, Thala. That's all it is. I don't have a link. It's just a word. There is no link. If that makes sense. So you have to go get started. You have to start now. Enter coupon code. Scroll down. I got you. That's what I do. Guys, I'm going to take a minute. Well, what you want to do, yeah, is you want it to be on your same one. You don't want to create multiple logins. They even tell you that. GARS, I can't. Unfortunately, I don't use the trade copier. I know exactly nothing about it, but I'm going to show you where. If you go to the traders chat and search trade copier, there are a million topics on it. And then John Novak created a link here that talks about it right there. So the second link is the one you want. And there's a lot with the trade copier right there. I actually don't use it, but I know where to find the answers. And guys, I'll be back in 5 minutes. If your rules are met, take a trade. If they're not, take a picture and tell me what you see. If you've never posted a picture in this classroom, post a picture. Let me know what's going on. Guys, I'll be back in just a minute and we'll get back to it. The first thing we're going to do is, guys, give me a wire and no, a wire and in the room. Do I have odds favorable momentum on my 13-2? What do you think? Especially brand new users as you're getting through, because this is your first step to identifying, right? Shogun, you say no? No? All right. So if I don't have odds favorable momentum, what's my plan, guys? Just wait. How easy is that? Seems simple, right? So while we're waiting, what can we do? Well, let's get better at termination conditions. Price reaches a divergence high. Absolutely no trigger lines break through. I'm not going long here, right? Even though those small triggers are trying to break above. Price reaches support. Absolutely no trigger lines break through. I'm not going short. 90% of what we do, guys, is sitting on our hands waiting for advantages. Price goes all the way to resistance. None of my trigger lines break through. Look at what your 5-1 is doing. Guys, this is where people without a plan get chewed up. Well, it's red. I think I should go short. Oh, no, these triggers are green. I think I should go long. I think this was an entry. Was that an entry? Son of a gun. Nope. I've been running since 4 a.m. this morning, Steven. If you are having challenges with NinjaTrader 8, though, before you reopen it, make sure that you go through this process. And this helps a lot with stability. So guys, we're just in a hurry up and wait pattern. I like to call this the go make a sandwich pattern. And what do we see on the 13-2, guys? There's that 50-50, right? If you took a shot and it didn't work, there they are. I just pulled them up, Jose. If you took a shot and it didn't work, then you're waiting for odds favorable, right? You're waiting for no termination conditions. You're just in a holding pattern. So, Stephen, the second thing is if you are concerned about challenges, go to tech support and let Jason take a look. I hate to say it, but sometimes NinjaTrader closes, and it stinks, but it does. But there's a lot of things that you can do to help avoid it. And here's the whole... John has worked absolutely tirelessly to try and get it super stable. So go through and take a look. Make sure that you're doing this. And as he finds things, he may add something. Going through, taking a look. And then let Jason help too. This was his latest discovery, Stephen. Making sure that the drag and drop is unchecked. And remember, guys, that the coding for your software is the exact same on 7 as it is 8. So when we're getting these challenges, it's not a Nexgen challenge. It's a Ninja challenge. But Nexgen is working every day trying to get it to where you guys can beat these challenges. I think it's important to remember that. Sometimes people will review Nexgen and just air all their frustrations with maybe their data provider or their broker or their trading platform. Remember that we're separate entities. Jose, did you get what you needed out of my charts? So the 50-50 doesn't work, right? Large triggers below the 1-to-1s, odds favorable momentum, smalls below the large are wide. Show me a picture of yours, Jose. Seven or 8? Guys, on a 50-50 trade, if we were creating a window of opportunity, an area where the market is likely to continue, there's one line, those favorable large triggers. So you're still on 7, Jose? You've got your synthetics. I'm just looking real quick. We're the same here. You've got 5 ones there. You've got a 21 here. And this one's the same. It's almost like mine stopped printing and yours didn't. I've got the same lines off to the side. Timestamp 1043, we're on the same. Yeah, Stephen F. One thing that, if you've still got the license and stuff for 7, you can use 7 as well. Jose, did you do the reset data? Repair data? And you're getting memory cards? I like that. I'm not 100%, Jose. Why would it be different? It looks like, and correct me if I'm wrong, and guys, remember, I'm not a tech guy. These synthetic fibs just stopped printing for me. And I don't know if you guys know this. I use JSON probably as much as you guys do. Because where I'm good at reading indicators, I'm not great at tech. So 50-50 trade with divergence. Big gap back to the large triggers. We'll see if it closes that gap. Jose, I'm sorry that wasn't more helpful. And I know that getting with Jason, and I'm not sure if my 7, but typically the fibs are the same. When I line up my 13 with my 7, or my 8 with my 7, it typically works out. And then Thala, what chart do entries happen on? We're going to go through the process and answer like that. That's what I do, Stephen, on the 5-1, right? So these 1-to-1s, Thala, were they inside of favorable large triggers? Stephen, that's the exact same process that I take. Were they, Thala? Are you sure? Seems like they were outside of those triggers, right? Yeah, in this chart. So we just don't even worry about them, right? And then, yeah, Stephen, I'll show you a picture. This is what my setup looks like, just if it's helpful. I run my 13-2, and then I'll run my 5-1 with my synthetics on it. And then I'll run a NinjaTrader 8 without synthetics right here. And that's the only NinjaTrader chart I run when I'm trading live. I use 7 for my analysis, and then 8. But the flip side is John never has an issue with his. But John's got an amazing graphics card, and I don't. He made fun of mine yesterday. He ran a bench test on mine and made fun of it. So guys, pivot from beyond the areas, right into support, 50-50 trade, divergence prints, lower probability trade. Termination condition creates a full reversal, pushes it beyond the areas. 50-50 doesn't work, comes back to support. There's your 50-50. This one's more likely to go up and retest and hit 41.14. You just run into this Indecision, right? Yours is 234 above average. That's much better than mine. I believe it called mine a tree trunk, Stephen. It called mine a tree trunk, which I found a little hurtful. But it is what it is, right? So guys, 50-50, you have the divergence. If you got it at the mid-band, your stop was pretty big above the large. You're managing assertively at this point. Whoops. That'll happen when you have an untitled workspace. So guys, here's crude oil. From termination to termination to termination to termination. See how they're winding up? And now you're 50-50 from a range-bound market. We'll see what happens. You have a 1,000, maybe a tree trunk as well. I'm not sure. John sent me this thing yesterday where if you want to go through and see how your computer stacks up, let me see if I can find it. There was his. That's John's supercomputer. That's my gaming laptop. Tree trunk, tree trunk. The desktop's an aircraft carrier. So in a perfect world, guys, that's what you're looking for. And if you are curious, I'm not sure if that'll work, putting it in the room, maybe not. It's called user benchmark. You can run your computer on it and test it and see where you fall into line with everything. Smalls haven't even made it through that divergence high yet. Oops, I'm drawing stuff on my charts for some reason. So this S&P 50-50 is working itself out, right? It's a 50-50. If you took the entry here, your stop was up here. Now it's behind the reversal bar. And you're saying to yourself, I'm managing assertively. So Shogun, you were asking earlier, what does it mean to manage assertively? Well, it's a matter of if-then. I don't know what OCCT software is, so I'm going to say no. Man, I hate to be that guy. This is what John sent me. User benchmark. I'll give you the link to it if you guys want to do it. But all it is, what does it mean to manage assertively? If then. If I get a higher divergence and my trigger lines are up here, then I'll exit a 50-50 trade. Or if I take profits on the first one, I'll get to break even. So you're creating a management plan based on if-thens. If this happens, then I do something. That's what manage assertively means, having a plan and being able to read your indicators in the moment. Learned hand. Let's see what you did. Momentum down with the smalls beyond. You took the entry on the pullback midband and you were stopped out. Learned hand. I'm going to give you probably what's going to be one of the best things that you could have for this trade from a management standpoint. Are you with me in here? Sometimes when people post, I want to make sure that they're still here. Yeah, cool. So let me show you exactly what got you on this one. Pull up my termination conditions. Are you familiar with the gap theory, learned hand? Have you ever heard me talk about that? When price reaches an area, those price bars accelerate away from the large triggers. Too fast, too far. It typically snaps back. So let me show you what happened on your trade. that created a challenge. When price accelerates all the way from those large triggers and there's room for a full bar to get back, price typically snaps back to those large triggers. So while I like your entry, the fact that they were a full bar away, your stop really had to be above those synthetics, not inside of them. And you see this happen all the time. And let's do this, and I'll show you. Let's find some examples today where it's happened. Price accelerates away, full bar back, pulls right back to it. Price hits the areas, large triggers more than a full bar away, and it sucks price right back up. It's like a vacuum, and it's not necessarily an opportunity to get into a trade. Price pulls all the way to resistance. The large triggers don't flinch. It sucks back and closes that gap. You see it again right here. What it does is it buys you a little patience. If you're looking for that short, look how it pulls right back to the large triggers. You see this over and over. There it is again. Pulls back to the pivot stop out, closes the gap back to the large triggers. So learn hand, what happened here is you did have odds favorable, everything set down, but because those large triggers were a full bar away, it just wanted to close that gap before it continued down. Does that make sense? And you see it a lot. And it's a great pattern to go study. And that's it. And so what I do, and I made this picture, I think, for somebody, or this was somebody posted a trade. That gap theory, price accelerates all the way through down to that mid-band. Large triggers don't follow. Typically, trades that are taken in between the bottom of price and those large triggers get run over. So we see it here. Price reaches the mid-band. The large triggers are a full bar away. Price reaches resistance. The large triggers are a full bar away. And learned, you'll be able to recognize that. Shogun, you'll be able to recognize that by the position of this reversal bar marker. If price accelerates away from those large triggers and they remain above the reversal bar marker or below that reversal bar marker, price is more likely to snap back. In this instance, you can see large triggers remain below. And now, let me teach you guys how to use that spreadsheet again. Isn't that a great thing to put into chart reading, to go back and study this gap theory, right? No, small triggers above the divergence does not mean gap fill. Small triggers above the divergence line means that the small triggers are above the divergence. All the gap theory does is it says that when price reaches an area and the large triggers are a full bar away, don't get caught in that area. It acts as a vacuum. Shogun, you're going to be learning for the rest of your life. Did that help a little bit though? Because I think that when you start recognizing that gap theory, I also have it in my termination conditions. Mid-band as a termination when those large triggers stay a full bar away. So I take pictures of stuff every day. Guys, fill your spreadsheet with these ideas. Fill your spreadsheet with these patterns. Take a second to annotate your charts, to write on there. What does it mean? So learned hand, go back to your picture, right? And re-annotate it. Go the large triggers, snap back and close the gap. And check this out. Look at your 21-3. There's the same pattern, isn't it? Repeats itself all the time. I don't have a manage assertively sheet with scenarios, Shogun. Let me show you the best example, in my opinion. And my opinion is exactly worth what you paid for it. This is the best example of manage assertively. Are you ready? Whoops, that's not it. Oh, don't try. Shogun, you'll drive yourself nuts. Do you want to know what to really do? Honest to goodness, Shogun. This is everybody. This isn't just for Shogun. So, learning to day trade, learning to read indicators is like eating an elephant, right? If you really want to give yourself the best chance, Shogun, focus on entries for 30 days. Focus on nothing more than the best of the best entries, nothing more than taking that perfect entry, right? And then once you are a rock star at entries, 30 days worth of looking at entries, you're going to see a lot of things and you're going to start to recognize a lot of patterns. Then you start working on management. That's the second bite. And as you work on management, if you're posting everything that you do in this room, you and I are going to have a conversation about everything that you see and everything that you do and every pattern. If Learned Hand hadn't posted that picture, Learned Hand wouldn't have gotten the gap theory talk, right? And now he has one more thing based on his practice to make him a better, more efficient chart reader. So don't try to remember everything. Focus on what's important. Focus on, that's it. Once you get entries and management, the patterns are going to keep growing for the rest of your life. I can tell you, I talk to my brother every morning, and every morning we talk about new things that we see. It's like, have you ever watched a movie, and then the second time in the movie, you're like, oh, I didn't catch that. And then the third time in the movie, you're like, hey, wait a minute, I totally didn't see that. So Shogun, manage assertively. There's your entry, right? Assuming that every rule is in place, this is your entry, right? Let's say it's one of those 50-50 trades. What do you know? You know that you've had one loss of momentum. So as the market comes down, that place where the market lost momentum, I can identify this fib in that area as my first trouble spot. Does that make sense? Right now I'm in the trade. I have all the advantages. This becomes my first trouble spot. So my first trouble spot might be my first target for my first contract. At this point, because I have to manage assertively, I'm going break even, right? A second divergence prints. In order to manage this trade assertively, I'm first going to assess, does my 13-2 still give me advantages? My small triggers are still outside, and I still have an area. At this point, I may say I'm willing to stay break even because I still have strength that's only 2 divergences. Does that make sense? And then once this pivot happens, I'll reduce risk a little bit more behind it. But then look at this. Then I get a third divergence, right? And I know that this third divergence is true on the third bar right here. If I'm managing assertively, I'm done. That's it. My conditions have changed too much on a medium probability trade for me to stay in that trade. Same thing here. If this is my best entry, this is my first trouble spot, I'm not willing to lose. And it might come get me break even. What are the conditions that need to be evaluated? Do you have odds favorable momentum? Do you have no termination conditions? Do you have an area for entry inside of favorable large triggers? That's it, Shogun. That's all you're doing. And then when you're in the trade, you can use that smaller, faster chart to help manage. But if this checklist is in place, go rockstar. And what's going to happen is you're going to get better and better at management the more trades you take. So every trade that you take that fits the rules, that's it. Every trade's different. Every trade's unique. So Shogun, what you're doing now, and not just Shogun, everybody in the room, what you're doing now is you're studying these rules and you're creating this database of rules-based trades and you're developing trust. And really what you're doing is I want you to prove me wrong. I want you to say, Mark, you are absolutely full of shit. Pardon my French. You are so full of beans with this high probability trend trade nonsense that I'm going to go through and I'm going to do my due diligence. And when I do it, I'm going to prove you wrong. I'm going to prove that odds favorable momentum and no termination conditions in an area inside of favorable large triggers. I'm going to scroll back and I'm going to find 100 instances and then you'll be sorry. Because I'm going to prove you wrong. What you're feeding me is grade A baloney, and I'm going to study my tail off to prove you wrong. Because, Shogun, what happens if you take the time to go back and find 100 examples of rules met high probability trend trades? What's going to happen if you look at 140 examples of high probability trend trades? Never in the history of this checklist has anyone followed it to the letter for a week and not done worse than 70%. Or not done better than 70% worse. Does that make sense? I say it with an awful lot of confidence. The problem is we're human. All it is, Shogun, it's the process. Do you play golf? Ah, Mark, how'd you do? Heck yeah. All right, so I'm not going to guess a lot. Do you play any sports at all in your life? Or chess? Do you play video games? Soccer? That's all right, I forgive you. Just kidding. First you learn to dribble, right? Then you learn to pass. Then you learn to score. But if you can't dribble the ball and control it, you're probably not passing to your teammates. You're not getting that pass off, right? And when you learn to dribble and score and it becomes effortless, then you can assess, right? Then you can assess the goalie's on the left side, I should shoot for the right side. The goalie's not looking, this guy's here, that's there. Exactly. So the process yields results, doesn't it? Does that make sense? The process yields results. What's the process? The process is the rules. The process is posting your pictures. The process is filling up your spreadsheet. The process is understanding when you have an advantage. There you go, guys, 50-50. Gap theory pulled it up. It came down. The process yields results. I can't say that enough. I love golf. I suck at golf, I'll admit it. But I love golf. And I kept going out in the beginning trying to shoot birdies. I'm going to shoot birdies. I'm going to be Tiger freaking Woods. I didn't know how to hold the golf club. I didn't know how to swing the golf club. Never kept my head down. Let my right elbow chicken wing all over the place. The process yields results, guys. It always does. to ascend to that level, Ron. But it's like that with anything. When I was 22, I moved to Colorado, and my sole purpose in life was I wanted to learn how to snowboard. So I bought a snowboard. I committed to the task. That's what you guys are doing right now. You're committing to the task, whether you lease or purchase software, by attending the classroom, by going through the process, you're committing to the task. But then I had to learn all the stuff that goes into it to make me proficient. And by the end of the season, I was pretty darn good. But at the beginning of the season, I was absolutely terrified, and I wasn't sure that if I was ever going to be good at it because it was hard and it took work. Guys, take the work. Because it's a lot of fun in the beginning, right? This looks awesome. And then you're like, uh-oh, I got stuff to learn. And then you kind of like, I'm going to keep doing this because I see the value. I see the value in the education. I see the value in the software. It's unbelievable to be able to recognize potential tops and bottoms before the market ever gets there. And then you're like, I'm a rock star. Now I get it. And that's when people go live too soon, guys. I know this is true because I lost $5,000 in 2 days. I took 22 losers in a row, and I had absolutely no idea why that happened. I didn't know why I got into the trade. I didn't know why I stayed in the trade. I didn't know what conditions I was looking for. And guys, they took my money instantly. And this is where people either quit because they decide it can't be done, or they have this self-realization, maybe I'm not as good as I thought. Maybe I do need to work. Shogun, maybe you do need to prove Mark wrong. And then it starts to make sense, and then it all comes together, right? Safia, once you hit this point, it all starts to come together, doesn't it? Ron? It does for all of us. And the cool thing is now you don't have to lose $5,000 of your money anymore. Now you can do one of those Apex funded things and you can lose $50 when you think you're ready and you're not. You can lose $100 rather than $5,000. So that's kind of the process. That's the path. Wait for advantages. It's a great feeling, isn't it, Tony? Salvia, Apex isn't hard. And do you know why I say that? Sticking to your rules is hard. Doing nothing when there's not a clear advantage is hard. Safia, can you say with the utmost confidence that your plan creates more winners than losers? I know, but can you say with no uncertainty, okay, so here's the second part. If your plan provides more winners than losers, how could Apex be hard? Apex is just a name. It's just a platform. Doing nothing, right? Doing nothing when there's nothing to do, that's the hard part. Guys, everybody's failed 2 times in Apex. I don't care how good you are. Because you're learning the system, right? You're learning the game. Safia, if you know without a question that if you're up $300 and you lose that trade, then your trailing stop tightens up $300, right? Have you guys ever heard Nexgen Ben say get in, get the money, don't let it retrace against you? Safia, I took the perfect entry, right? I took quick profits. And then at the first sign of trouble, I'm okay tightening up. And I did. I got out of this trade for about $150, I think. Didn't sit through the retracement. And then I took the next entry and I took it all the way down to where it was supposed to go the first time and made $300 on that one. That's a $500 trade with aggressive management. I have a reason to get out. I have a place. I have a reason for everything I do, Safia. I have a reason for my entries. I have a reason for my exits. If I went long, 3 divergences takes me out of a trade, right? 2 divergences with the small triggers inside on a 50-50 takes me out of the trade. D, if you want to do the Apex eval, and let me make sure I'm not missing anybody's questions here. D, I want you to go follow this link. Click on Get Started and make your decisions. And then they'll give you every instruction that you need to get going. You don't have to talk to anybody to get going. It's pretty cool. All right, Shogun, you're lucky you don't know anything. I like it. Thala, you're seeing very small entry points in gold, crude. It's very difficult personally for you to enter. Thala, show me pictures of your small entry points. And I know that sounds silly, but guys, if you just say, hey, that was crap, or hey, that wasn't good, or hey, Mark, what about that ES? Show me in pictures. Show me what you're talking about. Show me where you hoped for an entry, and then show me where you didn't take an entry. Learned Hand said I had everything ready and I'm waiting for an entry, and Learned Hand, you're on the wrong side of support. You didn't get a pullback. It went without you. It's just not your trade, right? And Thala, that's hard to accept sometimes. If your rules aren't met, if it doesn't come back to the area inside of favorable large triggers, then it's not your money, right? You walk into the bank and you say, give me all the money, you get tased and locked up. But if you walk in the bank and say, may I have my money, please, you typically walk out with the cash, right? Guys, this is your ATM. That's your money. Everything else belongs to somebody else. So Gary, what you see is when you follow the link from Nexgen. Guys, when you follow the link from Nexgen, it automatically gives you a 50% off. So when you scroll down, that Nexgen coupon code's already going to be in there for the save for the 50%. Highlight it and type in save 80. Right? So there you go. So they have save 80 right now. Miel, they do a running total. The average monthly compensation to customers since January 2022, nearly $1 million. Total compensation since the beginning, 14 million. 27,000 people funded last month. It is legit. And there's traders here that are using it and making money, making great money with it. But it goes back to what I was saying to Safia. Apex isn't difficult, right? Apex isn't difficult. Guys, there's nothing difficult about it. The difficult part is, do you have a plan? Have you written out a plan for entries, for exits? Do you have a management plan in place, or are you relying on your gut? Are you relying on opinion, right? And does your plan produce more winners than losers? Has anyone studied the high probability trend trade? Can you say without a doubt that this produces more winners than losers? I can. I've done my homework. And I feel very comfortable about that. But the challenge is nobody wants to just do this, right? It's boring. You might only take 2 trades a day to make that $1 million a year. That sucks. Most people want to be busy. Most people would rather be busy than rich, and they want to fight the trend, and they want to get in, and they want to do all this stuff. Thanks, Ben. And Ben, you've been with Apex for a while, right? And if you go over to Traders Chat, you'll see a lot of people too. Guys, Apex is a way for you to test your trading plan. Because what nobody wants to do, I certainly didn't, accept that you may be less capable of a trader than you may initially believe your first time out. It's a lot of maize in there, John Novak. Everyone feels entitled to win. Guys, I felt entitled to win. My last name's Novak. Come on. But only the people that trade well do. Before risking your capital, test your trading plan using a prop firm such as Apex. They run sales all the time. For less than $200, you can trade up to $50,000 worth of capital. The best parts, you keep the first 25 grand, 90% after that. If you make a $3,000 profit before a $2,500 loss, for example, on the 50,000, it's not, Miel. I stunk something fierce. Starting out, use their money, and you'll thank us later when you realize that you don't know about yourself, right? And when you make money in a real world setting with someone else's money, you can trade your own money. Remember, there's no penalty for being cautious when you start trading live. The actual harm comes from thinking that you're a better trader than you are and blowing out a large sum of your capital. And Apex doesn't let you take big drawdowns, Shogun. Exactly. You got to know what you're doing first. Guys, test your trading plan. That's the key. It's not go in there and see if you can win. Test your trading plan. What does your trading plan say? Test your ability to follow your trading plan. All right. So Safia, I'm going to go to the tutorial section. And I'm going to go to market flow, okay? All right. Here's your disclaimer, guys. Here's your warning. Market flow signals defined. Market flows that will signals that will initiate entries when rules are true. And just in case that didn't sink in, when trend trade rules are true. Not, I'm going to use market flow to get into trades that don't exist. I'm going to be able to break my rules by using market flow. I'm going to be able to take signals anywhere I want, and I'm going to be just crazy rich because market flow said. So Safia, Shogun, everybody listening to the sound of my voice, your rules need to be true, right? When your trend trade rules are true, market flow is nothing more than a confirmation initially. So Safia, when I talk about market flow initially, my first run at market flow, and I can't stress this enough, use market flow to determine whether or not you have strong trigger lines. Use market flow to determine nothing other than whether or not you have strong trigger lines. Look at the chart, and if you're looking for shorts, whoops, that's a video, or you're looking for longs, trade with the market flow strength. Does that make sense? That's your first use of market flow. Nothing more than trading with the strength of the chart. It's a confirmation of the 13-2 momentum. Pretty simple, right? You guys know how to read trigger lines. So the second way to use it is confirmation of an area. So Safia, let's say hypothetically, you're looking for a medium probability trend trade, right? You're looking for a 50-50 trade. Divergence prints. And you're like, oh, I'm giving away the advantage of momentum. Well, you have to do it just like you learn a trade, Safia. You have to do it easiest, and then you'll get more advanced through time, right? Just like you started with trigger lines, and then you got to termination conditions, and then you got to entries, and then you started working on management. Well, this is just the next piece of the puzzle. So when your rules are true, so let's say hypothetically you have a 50-50 trade. And on your 50-50 trade, pull up a picture. You're saying to yourself, this is my area for entry. My rules are met 100% at this point for entry. But because of the divergence, I want a little more confirmation. So at that area, whatever price it is, if the price on your 5-1 is 100, look at the price on your 8 range chart at 100. And you're going to look for either an arrow generated. If you're looking for longs, it'll be a green arrow up below the bar. If you're looking for a short, it'll be a magenta arrow down. You're going to look for antenna bars, and you're going to look for yellow bars. And here's the key. at the area where the rules are met. Does that make sense? So if your mid-band on the 5-1 is right here, you're waiting for this confirmation bar at the area where the trend trade rules are met. A green arrow for a long, a magenta arrow for a short. But buyer beware. There's a cost of confirmation. If the area is right here, you don't get confirmation until sometimes 5 or 6 ticks above, which means that there's a cost associated with confirmation. There's one of the down. Other signals that may initiate. Whoops. A yellow reversal bar at the area when the rules are true. An antenna bar, which means that it has a small body, a long tail, and it looks like that 1970s antenna from your grandparents. There's that antenna bar for a potential short. Don't stare at the market flow chart. John even puts, seriously, don't stare at the market flow chart. Trying to figure it out unless your dynamic Renko bar charts are telling you to take a trade, it's going to eat your lunch. The first time John gave me a market flow chart, I took like 374 trades that day. So, Sophia, here's a great way. Odds favorable, right? 50-50 trade. Divergence on the low says, you know what? I want a little bit of confirmation. As it pulls back to the area inside of favorable large triggers, you can see that I get one of those yellow reversal bars right from the area. But I'm not in at 33. I'm in at 31.75 because I waited for the confirmation. Does that make sense, Sophia? That's the first way to use it. The rules are met, you've picked your area, but you're saying I want a little extra confirmation, and you just wait for a signal. Do you have your market flow chart set up? 50-50 trade, divergence prints, you're waiting for the signal. You're waiting for it, it never happens. No trade. So here's what I suggest. Is build a market flow chart. Get that 8-range chart going, Sophia. And every 50-50 trade that you see if I can build one real quick. This is crude oil. I'm going to build a market flow chart real quick. And guys, I'm totally cool with turning the rest of class into a little bit of a market flow lesson. It doesn't optimize anything, Shogun. What it does is it confirms. That's all it is. It's a confirmation tool. That's it. Everybody believes that market flow is this magical entity that's going to get you a million amazing trades, but it's just a confirmation tool. So I built an 8-range chart. Whoops. No, I didn't. I built a 13-range chart. Let me turn that into an 8-range chart. Almost there. Sorry, I'm doing this off screen. So we're going to do a little confirmation test on a couple things. All right, as it loads up. So here's my 8-range chart. Hopefully I don't kill NinjaTrader 8. I just did some dragging and dropping. Okay. So Sophia, 50-50 trade with divergence, right? 50-50 trade with divergence. This is my potential area for entry. Does that make sense so far? I'm not sure where, there we go. And yes, I will show you how I did that, but I'm also going to give you the link so you know how to go back and take a look. 50-50, divergence prints. I don't get an antenna bar, right? That's all I'm doing is I'm looking for the confirmation right at the area. And I'm saying to myself, if I don't get confirmation right here at 80-50, then I'm not taking the trade. And I never did. I got a big red bar right there at 80-50. So let's scroll back. And that's really all it is. Let's look at this one right here. I'm sorry. At 9:41, I had a 50-50 trade. On this 50-50 trade, I identified the area where the market was likely to continue. Divergence prints, and I can say to myself, I'm not taking this trade without confirmation. Let's see if we got confirmation. There it is. I get confirmation from the area inside of favorable large triggers, and it says go. My initial stop still is where it goes. Does that make sense, Safia? 50-50, divergence prints, take the area, line it up. If you get a signal from the area, yeah. And if you don't get a signal, don't take the trade. So what you're doing is you're saying, I'm giving away advantages a little bit, and because I'm giving away those advantages, signals can be 5 days, Gary. And guys, this is what you have to study. If you're going to rely on signals to get you into a trade, shouldn't you know what they are? It's easy to put on a checklist, wait for market flow signal. Here it is, defined 100% right from the market flow section. You guys have to remember, we give you anything and everything that you need to be successful. Here's pictures of what each and every signal looks like. Guys, here's a video discussing all sorts of market flowness. So that's the first way that I use it. So Safia, the second way that you're going to use market flow is with the HVA trade. The HVA trade relies on a market flow chart. And just like the high probability trend trade, guys, it has rules. And you have to follow them, right? You have to know if your rules are true in order to see whether or not you need market flow. So for a high volume area trade, the first thing that has to happen is the large chart has to have a termination condition present. And Safia, as you go looking for these termination conditions on the 13.2, you want exact termination. You want Fibonacci-based areas that none of the trigger lines break through. That's the termination condition that sets up an HVA. Not an overrun. That's the best of the best. And then once you have the termination condition, you have to be patient. You have to wait for your small chart triggers to roll. So termination conditions you got from the high probability trend trade, right? Understanding trigger lines when they're in favor of the trade, you understand from the high probability trend trade. And then you're going to define your entry at the high volume area line, either magenta or green, that is inside or at the trigger lines. So there's a very definite set of rules. This signal means nothing from resistance, but when everything rolls, I haven't done this in a while. And guys, this is every time price hits an area you think may reverse the market. Odds favorable momentum directly into resistance, right? Do you guys see it? The buyers are in control. They have momentum, but they reached a key area. If you tried to go short here for just a second, you thought you pulled a fast one, and the buyer said, to hell with you, we're pushing stronger, and they take it out. Have you ever done that? Have you ever thought, oh man, I have support, I'll go long, and they run you over? So Safia, your high volume area trade teaches you patience. It teaches you to let these triggers roll. Because what happens while they're fighting? Buyers push up, sellers push down, buyers push up, but the small triggers change the trend. Sellers push down, the small triggers are below, and now the large triggers have rolled. And Safia, there's your magenta high volume area line. This was the line in the sand that the sellers put together, and those triggers roll and everything agrees. And they said to the buyers, triple dog dare you to push back up to this area. We're going to unload everything we have on you. That's your high volume area trade, selling that magenta line. But it's that patience, right? So guys, the high volume area is an amazing trade, but you have to be able to recognize termination conditions. You have to be able to recognize trigger lines rolling, and you've got to take the time to identify the area of entry. Not new concepts though, right? Safia, would you agree? Just putting them in a different range. So if you're going to take an HVA trade, guys, if this is going to be your second trade, and this was typically the second trade, take your rules and make yourself a checklist so that you can police yourself and make sure that you're following the rules. Because what a lot of people do, more times than not, is they don't have a termination condition, the triggers don't roll, but they say, I'm taking an HVA trade, and I see an HVA line, so I went short, even when all the triggers are up, or I went long, even when all the triggers are down. So make sure that you understand the trade, guys, and as you study it, write your rules on the charts, post it in the room. We'll talk about everything that you see. Does that make sense? But that's how we're going to use market flow, guys. First, you're going to use it as a confirmation for momentum. Make sure that you have the momentum. And then you can use it as a confirmation of the area. And then Safia, as you grow with the software, you're going to begin to recognize different things. Coming into a 50-50 trade, divergence prints, this yellow bar with a white bar combo says wait for that signal. 8 range is for HVA trade or trend trade. You can use it for a trend trade too, for confirmation at the area, right? But the HVA line, so Safia, hypothetically, let's see if he has a picture of it. Let's say the rules are met for a trade, right? And you've got everything going down and you're waiting for that confirmation. What if your area on the 5-1 lines up not only with indication that the area is likely to hold via 8 range, but there's also a magenta high volume area there. So you can use that high volume area line if it lines up with the areas inside of favorable large triggers. And here's the video to watch right here. And this one is 18 minutes, but that's a good one on volume analysis. And then the next step is you'll begin to recognize patterns at key areas, maybe at termination conditions, at reversal points in the market. You'll begin to recognize these patterns, giving you a little bit of advantage. but it all starts with the rules met. So everyone wants to learn the 8-range chart and the HVA and be able to use that, and it really is, it's a process. So I think that the best thing you can do is look for high probability trend trades. And what did your 8-range say when it happened? Did it give a confirmation of the area? Because you don't always need it, right? And I'm looking to see if maybe I can find a couple examples. But go back and look at your trades. Here's a good example. Rules are met, right? Everything says down. Divergence prints. A loss of momentum just means that it might push higher, right? It might push to the mid-band. It might push to the top of the range. Well, you can wait for a market flow confirmation to get you into the trade. And there it is. But just because you get it doesn't mean that you stop managing, right? You're still watching. So that's how you'll use market flow initially. Gauge the momentum. And then once you gauge the momentum, then you'll use it for confirmation. Not necessarily. Shogun, if you're, it's similar to the 5-1, I think. It's comparable. Shogun, if my area is 53 and I don't get in until 45, it costs me 8 ticks for confirmation. So I better make sure that my trade is right, that I have room to the target, right? Guys, there's a cost to confirmation. You're going to give up 4, 5, 6 ticks every time. And if you're not willing to give that up, you're welcome. Then just wait for the best trades, because the best trades don't need confirmation. If you use market flow for confirmation, you can put your stop above the market flow signal that got you in. But that doesn't leave you any wiggle room if it retests and your rules are still met, right? So it's a process. It's a process. And this is why I always say, guys, focus on the best at first. Focus on your best trade. All right, Safia, you're on 8, yes? New chart. And it's going to have us build the new chart. I'm going to use crude oil. I'm going to put in an 8-range template, 8-range chart with market flow. I'm going to make sure that I'm using a range bar. You don't want a Nexgen Rinko. You want it to be range. The value is 8, and you have to enable tick replay. You're going to go 5 days back on your range chart. And you're just going to click OK. Ron, you too. Have a great weekend. Enjoy that sunshine. Mama got a job offer potentially in Virginia. If she gets it, I'm going to storm the beach with you. And then mine built on a different monitor. Jose, there is no class tomorrow. The markets are closed. And then it creates that. So here we go, 50-50 trade. Safia, let's go through it. Smalls above the large are wide. They're angled in the direction of the trade. There's my area of support inside of favorable large triggers. Let's see if market flow gives confirmation. No worries. I'll do it again and get you the picture. So guys, let's see. If it pulls back to the area, let's see if market flow gives confirmation. 50-50. Area for potential entry. We're just going to see if market flow says giddy up. Oh, awesome. I will definitely do that, Ron. So Sophia, new chart, and that's going to bring up your data series. And I'll set it up for you, and then I'll send you a picture. 8-2 range chart, tick replay, 5 days. And all this is in the user guide. There you go. Just waiting, right? You're so welcome. Ziba, it really is. I feel very, very fortunate. Because I can teach you guys from anywhere, right? All right. Let's see what we have here. Tyree taking the momentum style trade. You know what? I don't know that I appreciate this, Tyree. You come into my class, you learn all this great stuff, and then you just disappear, and then you decide to show up and show an amazing trade. It looks like you've been studying a little bit on the sides. Isn't that great, though? Pivot stop out right there at support. Tons of momentum. No divergence, which is the key to the momentum trade. So, Safia, you wanted to learn the momentum trade, right? So every time somebody posts a momentum trade like this, steal it, because Tyree nailed it beautifully. It starts with a termination condition. Look at that perfect termination condition. It has to have odds favorable momentum. Everything has to be screaming up. And either mid-bands or one-to-ones right there with no divergence. That's textbook. Miel, you're having trouble downloading Market Replay on Ninja 8. So you downloaded from last quarter. So last quarter, you have to make sure it won't let you. Gosh, last quarter started 2 months ago, right? Can I ask why you're going so far back? I got you. If it won't let you do it, I'm not sure why it's not letting you do it. But remember that the patterns repeat themselves everywhere, right? So you can go back and you can use... Merali, you are new. Welcome to the classroom. We're going to teach you how to do this. Since the last 1.5 years, you're only taking entries at the close of the bar? Okay. Well, then my goal for you, my friend, is for you to pay attention in class and ask a lot of questions. And we're going to teach you how to wait patiently for the market to come right back to you. And what you'll do is rather than waiting for the close of the bar, you'll wait for an area inside of favorable large triggers. And the whole goal is you develop trust. Imagine the risk reduction. Imagine the profit potential. And Meow, maybe try crude, maybe try S&P. Go back, but I mean, over 40 days, you can get 80 days worth of trading. And go through that repetition and practice. I'm not sure. You could reach out to NinjaTrader and ask. Awesome. So, yeah, go back and check crude oil too. I do it a day at a time. Some people do a week at a time. I do a day at a time. So, Raleigh, the path is pretty simple. Go through the training like you're doing, come to class, post a lot of pictures, ask a lot of questions. The reality is, guys, is every time you post a question, every time you post a picture, you're getting a private session. You're getting a one-on-one with me, and it's a bit voyeuristic because other people are watching and listening and taking from the lesson. But in the moment of your chart, it revolves around you. It's no different than if you and I were on the phone staring at one of your pictures. So think of it like that. Don't worry about the audience. Anytime you have a question, post it in the room. Let's do the private session. There is no sunshine, Joel. I'm in the Pacific Northwest. It's going to be rainy for the next month here. 5 more weeks. 5 more weeks. I wish there was sunshine. It's supposed to be rainy all weekend. I'm going to go down to Eugene, Oregon. A good friend of mine has a food truck down there. She's from Texas, and she's making barbecue. So I'm going to eat well this weekend. Very excited. And guys, this is pretty much it. We're heading into the holiday. Remember, there are no markets tomorrow. There is no class tomorrow. You guys are always welcome to come into Discord. And guys, I like to encourage this. Share ideas. If you've written a plan, feel free to share it with me. You can email it to me. If you haven't written a plan yet, if you haven't written out what it's going to take to get you into the market and what it's going to take to get you out of the market, this is a great weekend to do that. Is there, what's it called, Safia? Guys, this is a basic checklist. For the trend trade, I have a checklist. For a 50-50 with divergence, I have a checklist. For a continuation, I have a checklist. For my management, I have it written out. When I'll add, where I'll exit, how much I'm willing to lose. I love food. Ronald, come to Dallas. I grew up in North Dallas in Plano. I was in Dallas 3 months ago. Where were you? I was living in the... You're in Plano? I was living in the colony. My wife had a contract. No, Safia, that's my own personal stuff from a while back. Musafer in Houston. You're in Frisco, Folger? I remember in Frisco was nothing more than a graveyard and a couple of roads. When I was in high school, long time ago, we may have allegedly driven out there to drink beer because it was so darn dark. It's so different now. Frisco is beautiful. We were in the colony for 3 months. My wife had a contract at UT Southwestern, but I grew up in Plano. I was a bartender in Deep Ellum for years back in the early 90s. That's what I did. Ziba, I'll be in your neck of the woods next week. Oh, wow. Probably not going to have time. I have a doctor's appointment in the Woodlands next week. I'm going to fly in, say hello to my parents, do the doctor, and I fly out the next day. But when I'm there for a longer visit, I definitely want to go have lunch or dinner with you guys. It's an Indian bar, huh? All right. I made tiki masala the other night. Didn't care for it. Prefer butter chicken. Thala, there's always a chance. So for those of you that don't know, my wife is a traveling nurse. Well, she's a traveling manager. Hey, look, there was your confirmation signal. Couple ticks above. And you're in Tampa? We will definitely be there because John's in Sarasota. So we'll go down there. So we were in Dallas doing a contract. My kids moved out. This is what we do. We've been in Portland for 3 weeks. That's it. Confirmation means you pay for it, right? So you better make sure you have the right trade. We've been in Portland for the last 2 months. We've got 1 more month to go, and now she's entertaining options from would-be suitors. In the last 2 days, she's gotten job openings, a couple in California, one in Virginia that we're seriously considering, one in Vermont. She had one in New Hampshire, real close to you, Thala, but it didn't work out. They wanted her there sooner than she could be there. So knowing the rules is the first thing, Shogun. Every time. If you don't know the rules, you're setting yourself up for failure. And they don't have to be my rules. They have to be your rules. The only thing that rules have to do is provide a statistical advantage, which means that you have to test them, right? You have to be able to write it down on a piece of paper. Let's do this. You have to be able to write down on a piece of paper. This is what it takes to get me into a trade. And then you have to work. Then you have to go back and find these rules met and take a picture, and find these rules met and take a picture, and put all those pictures into a spreadsheet. And when you get to 100 of these pictures, well, then you can create a win-loss, right? Then you know, going back historically, how often they win and how often they lose. And if they win more than they lose, doesn't it make sense that you can say, all right, these rules provide a statistical advantage, which means that every time they're true, I enter a trade. Because I don't have data suggesting that when I break rules, wins more than it loses, then I'm not going to break my rules. So guys, if you had odds favorable momentum and no termination conditions, it pulls right back to the mid-band, right there at the top of the large triggers. Guys, this is a high probability trend trade. Does everyone see that? So this should be your picture, right? Shogun? Whoops. Shouldn't you guys put this into a spreadsheet? Odds favorable, no termination, clear path, pull back to support inside of favorable large triggers. If you took this trade at 80.60, 80.59, you've already had a reversal bar. Your stop is below it. Odds favorable momentum, everything says up. Guys, it just gave you a second chance at 80.60, didn't it? And now if we get a reversal bar here, we can reduce risk. And I can use Fibonacci as my first potential area. Does that make sense? Do you see how we just did that? And then Safia, you do have odds favorable momentum, confirming the momentum here. You didn't need confirmation, but you got it. And guys, this is where people make mistakes with market flow. Safia, does that short signal mean anything to you without the rules met? It shouldn't. And if you're staying conservative, guys, if you're looking for that 100 and 200, you've already made $100 and it's in the bank. And if you went break even, you're still break even and you're up 70 or 80 in your second contract with everything going to the upside. Absolutely, Tyree. There you go. So buying pullbacks without confirmation bar? Well, yeah, when the rules are met, right, Shogun? When you have odds favorable, when you have no termination conditions, Thala, that means that you blew out your account. Didn't need confirmation here. But you would have needed it over here. Then it probably didn't have time to reset, Thala. Shut down your NinjaTrader 8. Give it a chance to reset and reopen it. And then when you reopen it, it should show your trade balance as your starting balance. If you do it and you don't close down NinjaTrader 8, it's going to remain on that previous one. I hope that helped. And guys, that's it for me. I don't need that range chart. Oh. Guys, have an amazing weekend. Enjoy your Easter if that's your thing. If it's not your thing, then just enjoy the heck out of your weekend. I'm not one of those people that says I can't say Merry Christmas if you don't celebrate Christmas. Just have a great day. Have a great weekend. Enjoy the heck out of it. And guys, I will see you Monday morning at 9 a.m. bright and early. And we will do it again next week. We're going to keep moving forward, guys. That's the plan. Thank you so much for being here. I'll see you guys Monday. Take care, guys.